Hey folks, welcome to this special conversation on Business Redefined. As always, your weekly, most comprehensive look at the world of business, finance and economics. The national flag carrier, Kenya Airways, is back to profitability after a decade. We are privileged to have the man in charge, Allan Kilavuka. Pleased to have you.
Very nice being here.
Karibu sana, Allan.
Asante sana.
Allan, we sat down 3 or 4 years ago, COVID time, tough environment. Let me just start from here. How do you feel?
I feel vindicated. I feel vindicated and I feel excited about the results. I'm very proud of my team. This is all they're doing. They worked extremely hard to get us to where we are today.
Yes. One of the sweet spots about your earnings is you had some pretty strong top-line growth. Of course, the bottom line is back to profitability. I think your margins are still very tight, but I was really impressed by the top line. Just tell us, characterize for us how that period was in terms of driving revenue.
Yes. So first thing to note, that top line is the highest ever the company has ever recorded for half-year results. And if everything goes to plan, we expect that we'll have the highest ever profit for the end of the year. Remember, we have not significantly increased our fleet. In fact, if anything, we have rationalized our fleet.
Yes, exactly.
Yeah, so what happens there? So what we do is just make sure that we're flying to the correct destinations. Remember Project Kifaru 1, where we looked at the network, we looked at the fleet, we looked at our destinations, we rationalize them and optimize them. So that, it depends on how many frequencies we're doing, it depends on where you're flying to, the routes that were not making money, we close them down, we started new routes. For example, now we're back to Maputo. Those kinds of decisions that are important to help you grow the top line. Of course, we also look at other avenues to make money. We have, of course, our subsidiary JumboJet doing exactly the same thing. They also have increased their fleet. We look at our cargo business and other businesses that we started during the period.
Mm-hmm. So we've come through a period, and one of the questions I meant sure I will ask you in this interview is, this is a set of earnings that finally tell us that Allan and his team have shrugged off the COVID-19 hangover, because for aviation, this has lagged more than anything else.
Yes. So the answer is yes. COVID can no longer be an excuse. It can only be an excuse on the balance sheet because it depleted your balance sheet. But from a performance point of view, you can never use COVID because if you look at the market, if you look at the travelers, they're back. In fact, they are 19% higher than 2019, pre-COVID.
Yes.
So passengers are back flying. Now, what we need to do is to make sure that our yields are holding and that now we are growing. So we've grown with the optimized network that we have today.
Yes.
What we now need to do is to expand the capacity we have, get new aircraft or more aircraft, and then increase our frequencies. So once you do that, then of course it continues to expand your top line. And you're right about the margins. The margins are thin.
Very tight.
Very tight. So when you expand your top line, even if you maintain your margin, of course you increase your operating profit, and therefore it helps you on your bottom line.
I see. Speaking about the balance sheet, Allan, the biggest chunk of guaranteed debt on your books was taken over by the National Treasury. Quite a breather there, I'd imagine, from a cash flow perspective. Walk us through that conversation you have with the Exchequer around the necessity of that and what that means now for your numbers.
Correct. So what is important here to understand is in 2017, when we did our first balance sheet restructure, the government guaranteed the US Exim loan that we had been given so that we could purchase the Dreamliners. So government had guaranteed, which means that if Kenya Airways defaulted, they were on the hook.
Yes.
Now, once government guarantees, it actually goes to their loan stock. So government records it as part of their loan because they have guaranteed the loan. Now, at the same time, 2017, in between, what happened? COVID happened. So we were completely unable to pay. So technically, because of being unable to pay, you are technically in default. And for that reason, then of course, the lender would go back to the guarantor and say, these guys are not paying. So
and you have skin in the game.
You have skin in the game. So to protect government thought it wise to take over the loan and on-lend it to KQ. Now, the beauty about this is, first of all, it takes away the risk to the government because, if they call a default, if the US Exim called a default, then they would require government to pay all the loan in one shot, which of course then would hurt the National Treasury. So if they take over the loan, then they agree on the tenure of the loan between the two of them, and then they on-lend to us than in Kenya shillings, which helps us as well because we have a Kenya shilling loan, which we're able to pay back comfortably, with the government support. And it also helps government because it removes the risk of a potential default.
Yes, quite a move there. And something which you mentioned, or rather the CFO mentioned in the call, which I think was pretty important for me, was that the tenor as well has been extended.
Correct. The tenor has been extended, but it's very important to understand, and Kenyans need to understand this, is that it's not for free.
Yes.
In fact, we are paying interest on that loan. So it's not for free. We're paying. It's just that its tenure has been increased to give us a bit of breather when it comes to paying back this loan. But we're going to pay it back, over time.
So from a finance costs perspective, what has happened right now is that you have been given some good runway.
Correct.
For your comfort now as a business.
Yeah, that, and as well the volatility when it comes to FX has reduced because the quantum of our obligations in US dollar has of course shrunk significantly, and therefore the volatility from a FX perspective has come down significantly. The other thing as well is it's important to remember we still have a lot of US dollar obligations.
Yes.
So because of the strengthening of the Kenyan shilling, those obligations, when they are revalued, there's a gain. So of course that helped us, just like it hurt us last year when we had the loss. Yes.
Okay. Still on the balance sheet, Alan. So you are scouting, rather, the national flag carrier is scouting for a strategic investor. By how much more do you want to deleverage this balance sheet?
Yeah. I will just err to say significantly. We want to remove any potential risk of not paying these loans as and when they fall due. So we want to deplete the debt stock quite significantly, and remain within the comfort. We want to rebalance what is called the debt equity ratio. And then part of the thing is, when the new investor comes, of course, they'll increase their equity. And of course, part of that money will be used to pay down the debt. But a bigger portion of that will be used for growth. It's because the reason why we're looking for an equity investor or an injection of capital, by the way, it doesn't have to be an investor. It has to be just an injection of capital.
Yes.
Yeah. If government was able to inject all this capital, we would take it from government. But because of their other priorities, then we look for an investor who can do this. So the reasons are, one is to deliver the organization, reduce the debt level. Secondly is for growth. So growth is additional aircraft, modernizing some of our equipment, and also improving our IT infrastructure because we're very heavily IT dependent. And then bringing in an investor who can also bring some value in whatever form. And then we want to divest a bit the business. Okay, there are many other small ventures that we have gotten into. So we want to expand, for example, our academy, our KQ Academy. We want to expand our MRO. We want to expand our cargo. We are thinking about a KQ hotel that we want to grow into. We want to expand our KQ medical. So there are many ventures that we're looking to expand progressively so that it diversifies our income sources. Today, 90% of the business, or thereabouts, or maybe 88% of the business comes from passenger business. So we want to rebalance that a little bit, to reduce that over time, over the next 5 years, to move it from 88% to probably between 65 and 70% of the business.
Wasn't that where we were playing? No, COVID time was even higher than that, right?
COVID time, actually, it rebalanced. Remember, we were
exactly, yes.
Yeah, we did a lot more cargo.
Yes.
Because cargo was the only one that was flying then. Yeah. But now, since we're back, pre-COVID, it's now back to between 88 and 90% of the business. And the balance is really cargo.
Okay. Alan, you mentioned the debt to equity. Currently, if I'm not wrong, you could correct me, I think you're at about 13-1.
Yeah.
Where would you like it to be?
We believe that it shouldn't exceed 2-1. It should never exceed 2-1. I was actually discussing with the finance team to make sure that progressively we should be in line with best business practice. It means a lot more capital injection, but moving to 2-1 would be fine. And I know you, Julian, you want to go and calculate how much we will need injection to get us to 2-1. But part of that would actually be some of because we have some large shareholders, some of them might want to convert some of their debt to equity. That will help to rebalance that just by that conversion.
Yes. Okay. You mentioned during the briefing call that we should be expecting an update in terms of onboarding a strategic investor by mid-September, which by inference means you're in the final stages.
Yeah.
How does the shortlist look
Yeah.
like?
So let me just maybe restate it. What you will get, because the question was, when are we going to get the financial advisor? We are currently, at the moment, we have 2 potential financial advisors who we are working through, looking at their technical abilities and so on. We will give them an award after taking them through the board approvals and so on. Then we will announce it in September. Okay, that's the update that you'll get. Because you're asking who are you going to appoint, and so we will announce that in September. But at the same time, because we're not just sitting pretty, we are currently scouting for potentials. So we have spoken to a wide range of potential partners. Some have expressed very great interest. Okay, so as part of the process is once we have signed an expression of interest, and we are sure these are the people we're going to look for. In fact, we're going to short circuit the process and just go straight for the jugular. But if we are not comfortable and we want a lot more people to participate, then we'll have to go through the whole process. We believe that by December, we will have either 1 or 2 potentials, and then we will be able to progress that.
Okay. Allan, you and I had a lot of conversation during COVID times around your fleet. And you remember at the time we were speaking about the conversion, whether it is wide-bodied or narrow-bodied. Then we came post-COVID, we were discussing about rationalization of the network and the fleet. Here you are, you're talking about we need capital because we need now to scale.
Yes.
Just walk us through that evolution.
Yes. So in pre-COVID, or rather, not pre-COVID, during COVID, our strategy was very clear. We're conserving cash. We want to keep flying in the skies, reduce our costs, and stabilize. So one way of doing that was what we said is shrink to grow. By necessity, we had to shrink because we don't have enough cash to maintain the operations. So we shrunk. We shrunk in different ways. More importantly, we sent away some aircraft, especially those ones which are coming to the end of their lease term. We did some sub-leasing to Congo, and so on. So we shrunk in that way. So we had less capacity. And then after that, once we've stabilized, now we have to grow. Okay, so it is within the strategy. Actually, it's Project Kifaru. So shrink, stabilize, and then grow. Now, an airline has to be big enough. It has to have enough scale. Why? Because the cost of capital and labor is very, very high. So for you to reduce the unit cost of operation, you have to scale. Yeah, because the smaller the scale, the higher the unit cost of operations or production. And so over time, we need to scale very responsibly. Yeah? So we don't want to go to another Project Mawingu. So we need to grow responsibly, step by step. We have a plan. We believe that we'll grow the fleet by between 30 to 40% for the next 5 years. And our destinations will grow. Today we are around 48 destinations. They will grow by that time. They will have grown to 65 to 70 destinations. And we have a very clear plan for that. So for us to be able to do that progressively, we have to invest and we have to grow.
How do you ensure that in this scaling, you don't do what in business they call scaling to burn? Because, Allan, you're very well familiar with the perception around KQ where it was Project Mawingu.
Correct.
Yes.
Yeah. And unfortunately, the Project Mawingu, by the way, just to be clear, was a fantastic strategy. It was a correct strategy. In fact, if it was successful, today we will be talking about a completely different story. Because it was the right thing that they planned. I mean, the plan was, in fact, I would say, what we're doing now is Project Mawingu Light, although the name Project Mawingu is a cuss word now.
I know, man.
so then we don't use that, right? Because the point then, and even now, was the airline needs to grow. It needs to scale. Why? Because, like I said, it reduces the unit cost of production. But more importantly, there is potential for growth. This market that we have, Africa, it needs air transport urgently and desperately, right? So there's potential for growth. So the market is there. So we have go take the market or create the market. Yeah, we by flying more and flying to more destinations, increasing our frequencies. Okay, so but the problem is there's a lot of external factors that could affect us. You mentioned mpox earlier.
Yes.
For example, I mean, it's something that we need to manage. So we have some experience based out of Mawingu, okay, because the financing was actually not the most ideal financing. Then, there was so much money, but we went too much towards debt. Now, as I told you, we're looking for equity, so that should rebalance that risk. Then we had other incidentals, so airport burning down, you had Garissa terrorist attack, Westgate terrorist attack, all those external factors that affected us. So the point is, how do you bounce back from such incidences that impact the airline? So those are the plans that you will put into place. You heard me talking about diversification. If you're a concentrated business, you have a concentrated risk. So if you have 90% of your business that shuts down because the airport is not working, of course it will affect your business. But if you reduce that risk by 20%, is what we're trying to do, so only 60% of your business is impacted, and the other sides of your businesses are continuing, then you have more sustainability.
Okay. Allan, for the avoidance of doubt, given where KQ stands today in terms of financial performance, the scouting for a strategic investor, can we safely assume that all the conversation we've been having around a potential alliance with SAA and the likes are off the table?
Absolutely not. Actually, they are, you see, this is a long-term play. The most sustainable airline in Africa is the one that adopts a Pan-African airline strategy. Okay. Yesterday I was having a discussion with the South African CEO about, so how do we go about this? Maybe the question to answer is, why is it stalling? Well, it's stalling because both airlines are going through their own restructuring process. KQ has reached a significant milestone, which is to announce, the bottom line profit. So which demonstrates hopefully beyond any shadow of a doubt, that it's a viable business. Because even operating profit on its own demonstrates viability. Only thing it says is that you need to look at your balance sheet because your finance costs are too high. And that's what we're currently looking at. On the other hand, South Africa is doing the same thing. They shrunk as well, quite significantly. Now they're on the growth path. So they're working on those things. So the question we have is, at what point do we actually do this thing? Every discussion we're having with a strategic equity partner, we actually talking about the Pan-African airline discussion, okay? Which is that, you buy into this, and by the way, there's a potential for even a much bigger pie, which is South African and other, because we are looking at a 3-hub strategy: East Africa, South Africa,
And West
Africa.
I see.
So, and investors are quite excited about that prospect, okay? Because you buy into Kenya Airways, you buy into the Pan-African Airline Group discussion.
This would be a JV kind of arrangement.
No, much more than a JV. Much more than a JV. Eventually, you should have a group structure where you have 2 airlines operating under one group. There are different airlines, of course, South African, Kenya, and West African. And but the important thing is that they're consolidating, for example, the asset purchase, doing the scheduling that complements each other, covering the whole continent in a much more efficient way. And then because they have different hubs, it's easy for them to reach into other pair cities.
Allan, that sounds like a whole different interview by itself. I wish we had time. But anyway, moving on. How is Jambojet doing? And I'm asking that question because Jambojet is very busy. And I think even because I fly Kisumu, Nairobi quite a bit, I think even the frequency has been increased.
Yeah, Jambojet is very busy. It's doing great. Okay, to answer your question, it's doing great. It's doing great. Just like any other airline, even Jambojet does need some capital. And as you know, we are the shareholder, so we cannot inject more capital. So they're relying on internally generated funds, revenue, for capital investment, which is obviously takes a longer time for them to grow. So they're eager to grow. They need to grow, but they're also deficient in terms of capital. So when we get capitalized, they will also get capitalized, and they can grow a lot more. So they're doing great. I think they have a very big share of the market. Their services are great. Aircraft suitable for the market.
Are they also scaling their fleet?
They're scaling their fleet. I think this year they'll add an additional aircraft. Now they're flying to Zanzibar from Mombasa, the only airline I believe that is doing that at the moment. They're flying to Goma as well. So they have gone international as well. Our initial strategy when we started doing Entebbe and Kigali, we kind of struggled a little bit, but I think we've got the mojo, so we know how to do those international routes. And it's more, people are more accepting the low cost model in the industry because they're difficult to accept it. It's not as straightforward as a full service carrier. So they're doing great.
What sort of, and I know you'll be very careful around this, what sort of ticket would they be looking for in their capital injection?
Yeah, because even if I told you, you don't know what their capital is at the moment.
Exactly.
It wouldn't be as much as us for sure.
No, it can't.
Because all they need is, they need capital injection mainly to invest in some of the capex, some of the engines they need to replace. They need a bit more additional capacity, so more aircraft. So it's not much. It's not as much as we do. Yeah, it's
Certainly,
a fraction.
certainly.
It's a fraction of what we need.
Alan, no one knows where FX is going. Who would have known this year, this time would be where we are with the shilling. And therefore, looking ahead, what are some of the intervention measures you're putting in place around foreign exchange?
Yeah, and I'll tell you where our concern is. You see, we're an international organization. In fact, I always remind Kenyans that I know our name is Kenya Airways, but if you really look at our operations, we are a truly international company. In fact, the only truly international company in Kenya. Because most companies that say are international, they are truly they're regional. They're big, regional. But regional. But we have offices in Europe, we have offices in North America, we have offices in Asia, and all over the place. Like I said, we have 48 around the world. So we are international. So we deal with multiple currencies, not just the Kenya shilling. Now, even if the Kenya shilling improves, which it has, and it's helpful because that's our base currency, we have other situations. For example, Ethiopia, their currency has significantly depreciated.
Significantly.
We have our money held up in Ethiopia because of the regime, the foreign exchange, the FX regime.
Even Nigeria.
In Nigeria has improved, to be fair, because once they liberalized, we were able to remove our money. So we have significant amounts of blocked funds. In fact, I looked at it yesterday. We have about $12 million. That's about 1.5 billion.
Yeah, that's a lot, man.
Yeah, it's blocked. We can't use them because they are stuck in this
various markets,
restricted countries.
Yeah.
So our problem is that because now Ethiopia, our money has significantly been devalued, and there's nothing we can do about it. And then we have these additional ones. So in places like that, we're trying to get to sell more in US dollars. Unfortunately, again, because of the forex regime, you cannot always do that.
As a natural hedge.
Yeah, exactly. Now, we talk about natural hedge. When it comes to our operations, because a lot of our sales are in foreign currency, actually mainly US dollar and the euro and the pound. So those foreign currency, the hard currencies, provide a natural hedge for the expenses. So that's not the issue.
So there you're cushioned.
There we're cushioned. The issue is balance sheet obligations, because those ones are not covered. So we don't have any significant natural hedge there. And that's why we worked with government to convert some of the amounts that we own to Kenya shillings. The idea also is to pay them down, which is why we're looking for a forex strategic investor. So we pay that down and then we reduce the obligations in dollars. Once we're able to control that, and then we have a natural hedge on the P&L, we should be fine.
I see. Alan, on this question of a strategic investor, we've seen a lot of appetite for this region's aviation from the Gulf.
Yeah. Yes.
Would that be your ideal kind of candidate?
Now you really want me to spill the beans. We see, what we've said, Julians, is that the strategic investor should be suitable for Kenya and for Africa. What we are hesitant to do is to have strategic investors who come here only for their benefit, not for mutual benefits. Some of these carriers, some of these investors that you're referring to are not necessarily good for Kenya or Africa for that matter, because their aim is to grow their hub. Okay? So move all the traffic to whatever hub they have. What we are interested in as Africans, not just Kenyans, is to grow our hub here. It's like manufacturing. You don't want to export jobs. So these foreign investors who are interested in Africa, they will be exporting jobs by doing that. If you don't create big hubs in Africa, like we're trying to do here in Kenya, you by definition, you'll be creating another hub elsewhere. So all those jobs are exported to that area. We don't want that. In any case, you know that Africa is trying to trade more with each other.
AFCFTA.
Yes. Yeah. And not just that. Africa is a large continent by land mass. Yeah, it's a large continent. We have deficiency in infrastructure. So very poor infrastructure, rail infrastructure, road infrastructure. And because we are large, much, much larger than Europe, for instance, by necessity, what do we need to do? We have to fly. If you want to trade between Kenya and Nigeria, you have to fly, or you should fly, and so on and so forth. Especially because you can't go by train. The easiest way to get to Lagos is by flight. The easiest way to get to Antananarivo in Madagascar is by flight. And also because, it's quite a long distance. So aviation is critical for development, for economic development in Africa. And that's what those Middle East carriers have realized. How do we kick in now and take advantage of this potential? So we Africans need to wake up, because other people are going to come and have our lunch. And that's why we're struggling, make Kenya Airways, make other airlines in Africa, make them strong enough so that we can serve our own population, just like they do it in their areas. Now, if you go to Europe, European carriers dominate that market, right? Because they have sufficient number of aircraft, they have sufficient number of frequencies and so on. If you go to the US, exactly the same thing. So we Africans need to wake up, improve our lot, and do what is right for the continent.
Okay. Two questions as we dial down our conversation, Alan. One is that following the release of your numbers, many of us have been asking ourselves, when will we see your shares trading back again at the exchange? It's been a long time, Alan. Yeah. And you and I have had this conversation before.
It's just 3 years. It's been 3 years.
That's a long time, man.
Yeah, and so maybe to answer that question is to ask, why did we stop? Yeah. We stopped because at that point, when we stopped, there was a lot of speculation. And as you know, that's not the right thing to do, because at that time, the government wanted to nationalize the carrier.
Yes. So renationalize the carrier.
Renationalize the carrier. So there was a lot of speculation, and the price of the stock was completely distorted because of speculation. So we stopped it at that point for that reason. And then COVID kicked in. So in fact, that
quite a wild card.
Yes. Now, then what? Then after we did our strategy, we decided about, we need to recapitalize the business, and therefore, even that was going to be distort the price even much more. So we extended this suspension to avoid speculation, to avoid distortion of the price. And in any case, because the company was in negative equity, so it was very difficult to trade with it anyway. But now that we are in this space, what we would like to do is, once we have finalized the strategic equity investor, then the process of getting back to the stock exchange should kick in. And like I said, we hope to announce something by December or latest early next year. And there, from then on, I think we can get back to the stock exchange.
Okay. And given your performance, it might be early days, but is a dividend hovering anywhere in your conversations as top management?
How do you pay dividends? You pay dividends when you have positive equity. You cannot pay dividends when you have negative equity. And that will be addressed by continuing to be profitable, and then by the investment. So once we have those two, then we can have a discussion around dividends.
Okay. Final question, Alan, and I always like finishing with this question. When you look at your routes as they are right now, which is your most profitable?
That's actually a very simple one. That's the simplest question you've asked me today. Without a doubt, it's London, and it's been the most profitable route for a very long time. London is our, call it, bread basket. Is that what they say?
Yes.
Because of the relationship between the two countries, the past relationship between the two countries, there's a lot of trade, and also London serves as a gateway to other European countries and even to sometimes North America. So it's very popular, and people also love our service, especially our London service. So London is by far the most profitable route. We also have Johannesburg in South Africa, also very popular. We are now flying sometimes even 4 times a day to Johannesburg. We would like more frequencies, by the way, to London. It's just that we cannot get the slots. So those are the two key ones.
And are there any which have been a headache in the past, and you can say now they're getting to near break even and passing them?
Yeah, most of them would be in this region, in Africa. I think if I mention some of them, I think the citizens will feel will not feel happy about it. But we have actually stopped flying to some countries. We stopped flying to Bangui, Central African Republic. It was bleeding cash. That's the reason why we stopped flying to that country. We tried many things. We tried to reroute. We tried to play around with that, but it
didn't work.
It's very difficult. But we're happy to report. I mean, West Africa is a huge market for us. It's growing. And Accra, Lagos, those are really huge markets for us.
All right. Allan Kilavuka, I wish we had more time, but you're a man of busy schedule, so we shall close it with that.
Thank you very much.
Appreciate it.
Thank you very much, and thank you for supporting Kenya Airways.
Not a problem. We've been having a conversation with Mr. Allan Kilavuka, the man in charge of the national flag carrier. We wait for the updates on the strategic investor. We shall be keeping tabs, and you know where to get all the details? Right here. Business Redefined. Stay tuned.